Good day, everyone, and welcome to Admiral Markets and Forex Street joint webinar. My name is Nenad, and today we will delve into the post-Brexit effect on Euro versus GBP. So, guys, as you probably know, Euro has had a bit of strength after Brexit, but there are, of course, some implications that can be very, very interesting for all people who will use euro to exactly to for their holidays and who will exchange pound for euros. So I will also explain what you should do in that case, because now British tourists will be affected by fluctuations on forex market, of course. I will also delve into mid to longer term charts, and I will show what we can expect from Euro versus GBP. So before we begin, as always, our standard risk disclaimer explaining that online education materials are available by Admiral Markets Estonia for a global audience. So take into consideration that this information is not suitable for everyone. Admiral Markets UK Ltd takes no responsibility for information accuracy. This is solely my opinion, and in no way it represents the actual suggestion for the trade. These are not AM UK's opinions, and the website is globalnews.com website. This webinar is for informational purposes. So the post-Brexit effect on Euro GBP, we will take a look into Deutsche Bank and Brexit, summer holidays, latest ECB meeting, and then I will show a live chart on Euro versus GBP. So first, probably you have heard a lot of talks that Mr. John Cryan doesn't like the idea of Brexit. Well, basically, he doesn't like because he is a strong supporter of European Union, and the thing is that he has always been a strong supporter. But nevertheless, it can definitely provide opportunities in both up and down markets. And we already know that Mr. Soros went up in gold just before Brexit. And after Brexit, Mr. Soros shorted approximately 100 million worth of Deutsche Bank shares. Well, it can be explained as Mr. George Soros has always been trading, let's say, versus masses. And well, it can be the Deutsche Bank can be the victim of Britain's succession. The problem is that Deutsche Bank has tanked after the June 23rd, so after the Brexit, and Deutsche Bank fall to the lowest levels in Germany. DAX stock index was established in 1988. So, well, again, Mr. Soros was right, and he probably made money on this short. But let us think: will Deutsche Bank will be hit by Brexit? The point is, at this point, Deutsche Bank shows some immediate weakness. But it does not necessarily mean that Deutsche Bank will tank unlimitedly. The point is that 90% of its total net revenue comes from UK. And the thing is that there is, now I don't know the correct number, but somewhere in between 5 and 10,000 employees in London Deutsche Bank has employed. So Deutsche Bank has like in between 5 and 10,000 staff members in London. And as far as I remember, it is the biggest European bank in the city of London. So the point is, if I were Mr. Soros, I would probably take profit from those shorts, but maybe not immediately, because we still need to see whether UK and when they will actually uh, go with Article 50. Article 50 is not live yet, so we still cannot negotiate a Norway-style deal with European Union. So they still we don't know whether they will negotiate it or not. The problem is European passport. Now, Deutsche Bank definitely has has its name, okay? But without a passport, if UK finally leaves European Union, well, they won't be allowed to freely operate in Europe. So not just Deutsche Bank, but any European bank will not be able to operate freely in Europe. And not just Deutsche Bank, but all other banks will definitely need to move their stuff out of UK. I guess probably Deutsche Bank will move it to Frankfurt. Now, only 9% of Deutsche Bank assets come from European countries that don't use euro. Okay, so most of the business that generate revenue for Deutsche Bank in London could be done from anywhere in the world. So the thing is that it does have a negative effect, but not so negative as majority of people would think. Well, the thing is, guys, finance, as you know, we are traders. We can trade all over the world. It doesn't matter where we trade. We can trade all over the world. But the thing is, even though all financial institutions are heavily rooted in the financial hub of London, well, they could pretty much pick up and leave any moment if necessary and do their business from somewhere else. So maybe they will move to Ireland, maybe to Paris, maybe to Frankfurt. We don't know, but I know for sure that there will be no major movement of Deutsche Bank staff until we don't know what is the deal with UK, what about article, what they intend to do. So we still need to see. So the only risk for Deutsche Bank is UK center business. So absolutely, I think that Deutsche Bank will stop to tank, and it will recover, because the only risk is actually UK centered business. Now, summer holidays are also very interesting to people who would trade their money on holidays, or maybe people who would just exchange their money for their for spending. The thing is that there is definitely some change for British tourists that are heading abroad, especially if they go to countries that use euro as currency. So this summer will definitely mark a change for British tourists that are heading abroad, and they should feel the effects of a vote to leave European Union. But they shouldn't expect to see any major changes to their holiday. So now the only thing is effectively the exchange rate, euro versus GBP. So for travelers, for people who travel, the immediate impact comes in the form of spending while abroad. Now, you would probably ask why. Well, definitely it now costs more to buy foreign currency such as euro after the pound tank, and for people who come from UK, euro will present more costs to buy. Okay, so that is not an ideal situation for UK tourists. Also, the point is that tourists are effectively most interested in spending. So if they're interested in spending, they should definitely carry a prepaid travel card. So that is my advice to all people who come from UK and want to spend some holidays in countries which use euro as a currency. Prepaid travel card is a good choice. First of all, there are some disadvantages. Okay, I will explain that. But also there are advantages. Because first of all, you can load the cards before you go. That is a good thing. So you can easily withdraw the cash. Okay, so you can withdraw the cash from ATMs, and you can effectively go with lock-in rate. Now, what does it mean, a lock-in rate? Well, you lock in a rate when you load. So that means that you can win if there are currency fluctuations. Of course, if you lock in a bad rate, then that can be actually a disadvantage. So unlike debit and credit cards that calculate exchange on the day you spend, well, with prepaid cards, it's the rate on the day you load that is most important. So if the pound weakens after you load the card, you will gain. So it can be good to have certainty. Conversely, for example, if the pound strengthens, you will lose. Okay, there are a lot of companies, global companies, who effectively deal with global prepaid cards. So you can load cards with pounds, and then conversion will happen on the day you spend. Of course, some cards will charge you for not using them. So prepaid cards have more fees than credit on or debit cards. So watch for it. But I think it's a good idea to effectively lock in rate before you go, and you could actually benefit from a prepaid card. So this applies, of course, to Euro GBP conversion, to tourists who will use GBP in exchange of Euro. So watch for Euro GBP during summer holidays, of course. And finally, before I go to live charts explaining my thoughts on Euro GBP movement, well, as you probably know, we had latest ECB meeting that was not very, very interesting. And definitely, well, representatives of the world's biggest economies met over the weekend at a G90 meeting. So these countries, a lot of countries were focused on working towards supporting global growth and better sharing the benefits of trade. The thing is, this meeting was dominated by the impact of Brexit and fears of rising protectionism, guys. Protectionism is a term that describes when countries raise taxes on imports to make their domestic products more competitive. It means to protect their domestic economy. Okay? But despite that fear, GBP has witnessed recent strength because we saw oversold conditions. Of course, there is nothing that you or I can do to move the rate by ourselves. But the point is, guys, that, well, you already know that, but nothing that is falling can fall endlessly. So there is no endless drop of GBP. And it was really, really heavily oversold. Because of that, we saw a spike, and now the pound is in range, and all dips have been bought towards 3060, as I have explained also on my live session recap on Monday. So people who actually followed my advice to buy GBP dollar on session recap webinar, I gave the exact level 3060, and it went more than 140 pips to the upside. So or 100, it was, I made like 90 pips on it. So I hope that you benefit from it, because guys, with forex trading, history always repeats itself, and that is the biggest advantage. People who don't use history in forex trading will never make any money, believe me, in the long term. So historical price action is always one of the most important things for confluence. Also, we need to mention that there is a strong confluence between euro, GBP, and gold. Okay, so the thing is that on the topic of gold, gold has staged a drop in value as the general risk-on mentality prevailed in more risky markets such as property and equities. Now, the thing is that there is a positive correlation between euro, GBP, and gold, and on Admiral Markets platform, that correlation is plus 94%. So there is a strong correlation. So guys, the thing is that during risk off, now pay attention, this is important. I'm not sure that you are familiar with this, but you should be familiar. During risk off, gold is popping up as a safety trade, and Japanese and euro may be going up, while on stock traders screens or on stock markets you will see drop. That is why investors are fleeing into safe haven assets such as gold and Japanese yen. Okay, so that is also fundamentally supported by the fact that UK has lower gold reserves in its foreign reserves, and therefore less exposure to the precious metal than European Union. And that precious metal is gold, guys. Yes. Okay. So that can change over time, but as of this point, as of now, euro has been going up in a risk off scenario, and Japanese yen too. Okay, so pay attention to it. Now on Euro GBP live chart, as I explained, guys, today also, you can read it on Forex Street. There is head and shoulders on daily time frame, and you can read my analysis. If you went after I paused the analysis, you would have been like 20 pips in a profit now. Okay, that is measurable because I post always prefect analysis. So the point is that you can effectively benefit. I will show it now here. This was my analysis, okay, and you can actually see where I said that shorts could be initiated from this part, and I hope that you made money with this. Effectively, Euro GBP has been in uptrend, but important thing is that it's very close to support, and now I see a drop. So 84 to 20 zone for shorts. The shorts were initiated, and we now need to see confluence. So read all this analysis. So this is intraday, intra-week analysis. So this can be valid for today, tomorrow, and possibly Friday. Okay, so you should read it, and if you're in a trade, then now at this point you are in profits. Now, as for Euro GBP, there is also a couple of things we should mention. We should watch daily chart for this. So guys, this is head and shoulders. Yeah, this is head and shoulders on daily chart. And here you can effectively see that there is a strong trend line that is making up for this support here. And if we don't see a further push to the upside on this pair, we might see another initial another drop. So why I did shorts? Well, it It is explained in the analysis, but the thing is that here we can easily spot, guys, we can easily spot a bearish pennant. Okay, so here you can see the flagpole, here is the pennant, and here you can see that Euro GBP has been rejecting from this resistance. Now, the point of this analysis here is to show you that even on 4-hour time frame, guys, there is head and shoulders that is almost perfect. And if we see a drop below this low here, okay, and that low effectively is 82.49. If we see a drop below this level, well, we should proceed lower, definitely, guys, okay? Because this is right, this is head, this is left shoulder. Additionally, within this head and shoulders, there is a bearish pennant. If you zoom the chart to the right, you will clearly see the pennant. But if you zoom it to the left, you will see head and shoulders. Also adding to that is head and shoulders that has its merits on daily charts. So here, guys, we don't see a pennant. Here we see head and shoulders on daily. If you go to weekly chart, guys, we can actually see consolidation, and we can see that this top here on weekly chart has been rejected with a strong candle. This candle is now a mother candle, and this candle is the most important interim support and resistance here. While I'm talking, you see Euro GBP is still dropping, so I was definitely 100% right when I said to short it here at this point, because you guys cannot fight versus price action. You can learn systems, you can read about Forex, whatever you want, but one thing is for sure, price action is the ultimate tool for trading. Okay, so even if you thought that you could long there, guys, why would you long at resistance? So yes, the trend is still up, but now the chart looks different. So we need to see where it will retrace to. If you put a Fibonacci here from the bottom to the top, okay, here we can see if this low is broken, Euro GBP should target 81.22. Okay, it should target it. But the thing is, it can even go lower, guys. It can even go lower. The point is, it can even go here, also to 79.90, also to 79.90. That is, well, golden ratio. So this zone and these levels are particularly interesting for me. Why? Because here, guys, you see, this is so-called bullish order block. So here where I have marked the candle high, that is 79.93. Okay, it's 79.93. That is called a bullish order block. And those order blocks are very, very interesting, and I use it heavily in my analysis. So here, guys, you see that is the top of the bearish candle, the top of the bearish candle, and then this candle has been broken, retested, and now you can see it in the past. You can see it here in the past. So if this is the present time, this is the past here, and you can easily see that this level is a very strong. This level provides a strong confluence for price action. So 61.8, 79.90. If we see a continuation of the move I posted today, then we should see a retest of 82.40 region. If it drops below, it should go to 81.20. But here, guys, I would possibly look for a potential long, because here every trend needs a retracement. You know that. Every trend needs a retracement. So if this is a trend, which indeed it is, this pair needs to drop lower. Okay, it needs to drop lower. And now I'm telling you what I see, a drop from this region. Then we will see what will happen here. Then if this low is broken, we should see this one. But we could see also rejection from this zone. But in my opinion, how I would, if I would to place a pending order, I would put a pending order here, because this zone here add like 15 pips more or less. That would be the zone 79.92 to 80.15, 80.14. The point is, guys, here also, you see, so 72.92 to 80.15, we should see bounce, guys. So this is very important here. Watch for this. You have bullish order block, previous double bottom. So in the history, we saw very strong buyers here. So in now moment, buyers are there too. Don't forget, you need to watch historical versus now moment concept. So I will be putting a pending order here. So 79.90 to 80.15 for long entry. But now at this point, I'm looking to short it. This short scenario would become invalid if we see a 4-hour close above 4 candle and above this, above H3 and this 4-hour candles high. So if we see a push forward and a 4-hour close above this level here, 85.55, proceeded by this retest of the high that is 86.26, the bulls will be again in a complete control, and at that point we should forget about this level. So now what I would like to see, a continuation of my setup again towards this low. Then I would watch reaction here. I have my pending long here, targeting these levels, and at the break these levels, and at the break these levels. I use profit stops. You know how I trade. I use profit stops. So when price moves in profit, I just move my stop loss further. So I effectively ride a free ride, and that is what I see in Euro GBP. Okay. Now, guys, if you have any questions, please do not hesitate to ask me. So, and again, this is it. The final report for Euro GBP. Head and shoulders on daily. My analysis today shows short-term setups to the short side, and this zone here, 15, 12, 79.90, can be used for buy setups for the reasons I stated. So please pay attention, and well, if you would trade it, well, then that is a good level, a good zone to actually go for long trades. And don't forget, guys, that if you go to have a holiday on in country that that has euro as the main currency, but you have only pounds, well, I advise to use prepaid card, because you can lock in the rate, and that can be beneficial to you, because you will be protected against fluctuations of the Forex movement while you are away on your holiday. Okay. So I don't use pounds, and this summer I will go to Spain, and well, I will use euro, of course. But guys, lock-in rate if you use GBP, because you don't know what can happen while you are on your holiday. I hope that this webinar has helped you to make some decisions. So not everything is that black. I already warned it some time ago. I told you that the GBP will drop, but I also warned you that it should bounce. Okay. Nothing is eternal. Nothing can last forever. Okay. So thank you for listening to me. I will provide you with the analysis soon, as I always do. And I wish you to trade safe as always. Cheers, everyone.